Okay, I think we'll get started and hopefully any late joiners will join us before while I'm just doing the housekeeping. So good afternoon and thank you for joining us today. My name's Aisling and I'm on the research team here at StuRents. And before I hand over to Rich, I'm just going to do a couple of small pieces of housekeeping. So firstly, if you're not aware, this webinar is being run to coincide with the release of our 2023 annual report. A copy of that will be made available in the coming weeks, so please keep an eye out in your emails and on your socials for that. We are recording today's session and a copy of the recording will be sent out to all attendees in follow-up emails and communications. I'm delighted to say that we are joined by some industry experts today. They'll be continuing our discussion at the end of the data presentation and hopefully answering some of your questions. If you do have any questions, there's the Q&A function you should see at the bottom of the screen, and we'll try and just get through as many as we can. So on that note, I would like to introduce the panel. Holly, if you wouldn't mind if we start with you, if you could give a brief 30-second introduction.
Yeah, thank you so much. So my name's Holly. I'm a policy advisor at UCAS. And today I'm going to be talking about our Journey to a Million work. So our projections that we could see up to 1 million higher education applicants to UKHE by the end of the decade. So for context, that's about 30% more than in 2022 and double what we saw in 2006. So I'll be talking a little bit about how the accommodation sector might sort of prepare for that.
Brilliant. Murdo, if you wouldn't mind giving your introduction.
Yeah, thanks, Aisling. Murdo Mcilhagger. I'm co-founder and co-managing director of Maze Living, which is a joint venture with Global Fund Manager Aberdeen. We provide investment, development and operating services for investors.
Brilliant, thanks. And Philip?
Yeah, firstly, sorry for my slightly husky tones. Yeah, a bit of a cold over the last few days, but we will continue. Yeah, so I'm Philip Gould, Chief Lending Officer of Avonmore Capital. We are historically a provider of development finance into the UK residential space, with a recent move into the student accommodation sector with a clear focus on the affordable area of the market.
That's great. Thanks, everyone. And I think we're all really looking forward to hearing your thoughts and opinions with the questions at the end. Now, just before I hand over to Rich for our data presentation, we're just going to run through a couple of poll questions we'd love to hear the audience's opinion on to get some live feedback. So they should all be up on your screen now. And there's 4 questions. So I'll just read them out. And if you could just vote on the poll. So the first one is, what are your rental growth expectations for the market as a whole for the 24-25 season? And I think you can see the options there. So it's 0 to 4.9%, 5 to 9.9, 10 to 14.9, and then over 15%. And the second question is, do you anticipate Indian international students making up proportionally more or less of your tenants versus last year? So I think the options are more, less, unchanged, or unsure. Third question, where are you expecting the biggest cost pressures to come from in 2024-25? So do you think that would be wage growth, utilities inflation, property management software fees, payment processing fees, or interest rates? And finally, which aspects of ESG do you prioritize during your decision-making process? So environmental, social, governance, or no preference or priority. So we'd like as many of you as possible to answer those questions, and we'll have a look at the results at the end. So thanks for everyone that does. And without further ado, I'll hand over to our own head of research, Rich.
Thanks, Aisling. So I'll leave those poll questions up for a bit, and yeah, we'll kind of discuss the output of those at the end of the presentation. If you bear with me 2 seconds, what I'll do is I'll just share my screen and we'll go through today's presentation. So as Aisling's already alluded to, obviously we have the panel discussion after this presentation, which will be about 20-25 minutes long. By way of a quick introduction, in case anyone on the call is not familiar with us as a business, so StuRents is the UK's largest student ecosystem. We actually have 3 distinct arms of the business. We have our listings platform, StuRents.com, where we list over 750,000 beds across around about 100 locations across the UK. We also have our own proprietary property management software, and I'll come back to that shortly. But to date, we've executed over 2 billion in tenancy value for our customers. And then we can leverage those two platforms really to provide highly granular independent data to the sector as well. On that particular point around PMS, just by way of a quickie kind of announcement before we go into the actual data presentation. So within the last week, we've actually rebranded our PMS, and that is now called Concurrent. So you should start to see some more information online and socials regarding that. And really the rebranding reflects the fact that the system's capabilities go beyond student and are also applicable to the resi market. And that's a full stack solution, and that's already being used by a number of, again, student as well as non-student operators. And you'll see a few of those brands below. If you do want to find out any more about that, do just go to concurrent.co.uk. In terms of topics we're covering today, we've actually got a lot to get through relatively quickly, so I'll skip through this slide and just crack on. So we'll start with a quick recap of the UK student accommodation market. And to start with, just focusing on the supply side, and really this is just a very quick overview and summary of existing accommodation in the UK. So if we break it down into three distinct accommodation types, so HMOs, private PBSA and university managed PBSA, we can actually see that in the UK, HMOs still equate to around about half of all accommodation available to students. Private PBSA, we're looking at about 25%, and then university beds, we're looking at about 22%. So what is interesting to note there straight away is if you actually add up the private sector, they do provide roughly about 80% of all accommodation in the sector. In terms of trends, certainly what we've seen in recent years is the proportion being managed by the private sector, and particularly private PBSA, has been increasing, and that's predominantly due to the fact that a lot of the new beds coming to the market, again, are predominantly being managed by private operators. If we look at the pipeline, that's a trend we would expect to continue. So we would expect the proportion managed by universities to actually continue to shrink, and therefore a huge reliance on the private sector. In terms of looking at broad supply and demand fundamentals, this particular chart on the right-hand side is just looking at the top 20 locations outside of London, but this is applicable at a national level as well. What we've definitely seen in recent years is certainly demand growth outstripping supply growth. That's come at a time, even though the 18-year-old population in the UK has been falling. Obviously, during that same period, we've seen a rise in participation rates. So again, actually demand, despite that, has been on the rise. And then equally, as we hopefully you're all aware of, international demand, again, has been very strong. And that's all leading to this demand growth outstripping supply growth. We'll come back to that chart a bit later, just to kind of project it forward, but it gives us a good idea of where we've got to at this point in time. So just to look at the demand side of the equation to start with, I won't spend long going through some of these because, again, hopefully it's not necessarily new news to people. But we can see from this particular slide that there has been a steady increase in the number of full-time students going to university in the UK. Obviously, the UK as a destination is still one of the top destinations globally. Obviously, we have some of the best universities in the world. So that demand growth has been very consistent. Interestingly, if we focus on just the last few years in particular, and we'll come back to this during the panel discussion, certainly a lot of that growth has been driven by postgraduate demand. I think particularly during COVID, obviously during that time, the jobs market was arguably uncertain with the pandemic, and therefore that partially explains that increase in postgrad recruitment. But again, interesting to note, a lot of that recent growth was driven by postgraduates. Looking at the latest UCAS data, what we can see from the chart on the right, again, this shows year-on-year changes in the number of applicants, is that applicant numbers from non-EU countries has obviously been very positive in recent years. And again, we saw a pretty large spike during the COVID years. That has somewhat slowed this year. And again, we'll touch on this during the panel discussion. But we have seen still positive growth in applicant numbers from outside of the EU. Again, just to summarise something we've discussed before, but we can see the impact of Brexit on EU recruitment quite clearly, with significant declines year on year, particularly in 2021. And then possibly a surprise, but this year we have also seen actually a slight fall in the number of applicants from the UK as well. And again, that's something we'll touch on a bit later. Just drilling down into those international numbers in a little bit more detail, particularly important, obviously, for the PBSA sector. Generally speaking, the trends coming out of China have historically been very positive. And we can see that by the two kind of navy areas of the chart on the right-hand side. Again, though, looking at the most recent data, what we can see is a significant amount of that growth has actually come from post-grad Indian students. So that demand growth has been very significant and very significant over COVID. And that does have implications at a local level in terms of demand profiles for accommodation. Certainly, we've seen it in places like Leicester, and we'll see this in a bit more detail on the next slide, I believe, whereby actually Indian demand in somewhere like Leicester has been rapidly rising and Chinese demand has actually been falling. So the demand profile for accommodation in that particular location has definitely shifted. On that point, this particular slide is focusing on the change in full-time student numbers from China specifically, and we've just picked out a handful of universities on the right-hand side. And what is very clear from that data is the real difference between not only locations, but in this case, institutions as well. So if we look at University of Glasgow, for example, or University of Manchester, up to COVID, we're seeing good, strong growth in Chinese numbers, and obviously when COVID hits, a rapid increase in that recruitment from that particular country. But that demand is not evenly distributed. And if we look at somewhere like the University of Leicester in particular, we can see that actually in 2021, we're looking at almost 2,000 fewer Chinese students at the University of Leicester compared to 2014. So a steady decline in that particular demand profile. Interestingly, University of Liverpool had been increasing, but has seen a small decline as well. So, I mean, broadly speaking, all the fundamentals from a demand standpoint are still very positive. So it does kind of beg the question of, okay, that's all fantastic up to a point, but why is the market not just delivering more stock to accommodate that demand? I think this slide really highlights one of the key challenges for the sector and obviously therefore for students as well. And this particular data set is looking at the rise in the cost of new housing. And what we can see, particularly post-COVID and particularly due to the impact of the Ukraine war, is that construction costs are still very, very elevated. They have somewhat plateaued, but they are still very significant. And that does obviously create challenges for developers and investors. It does mean that some schemes that perhaps pre-COVID would have been viable with the current cost structures just are not. Compounding that issue is obviously the cost of debt, which has gone up again significantly. And that's all creating these challenges with regards to bringing new supply online. We're also seeing that reflected in planning activity. This particular data set is tracking on a 12-month rolling basis the number of beds being submitted and the number of beds being approved over time. So if we look at where we are to date, we can see we're actually at relatively low levels, historically speaking. So there are certainly fewer developments being proposed and approved today than 2, 3, 4 years ago. Again, lots of reasons for that. Cost is going to be a big factor, legislation as well. What we can see from the latest data, though, and is reflected in the chart, is there has actually been a slight uptick in the number of new developments being proposed, albeit it will take some time for that to filter through into potentially approved beds because of the time lag. But that is one, again, we'll keep a close eye on. But having said that, that does mean that the delivery of new stock is slowing, which we'll see in a moment. Where developments are being proposed outside of London, we can see that the vast majority are actually focused around some of the key universities, key locations that have seen strong growth. And we can see that over half of all pipeline developments are in basically 8 cities, so Bristol, Leeds, Nottingham being some of the largest. I think one key consideration on the planning side, and we've seen this in places like Glasgow, is just to consider how timing can be pretty critical for developers and investors. Again, Glasgow, very well reported this year in terms of accommodation shortages, but certainly what we've seen over the last 6 months is a number of relatively large applications being put forward in a relatively short time span. So it'll be interesting to see as and when those schemes potentially come online, whether they're all coming online at a similar time. So that's something just to be aware of. Again, when those developments are being proposed, the majority, so about 44%, as we can see on the right, consist of studios. One of the key contributing factors to that is obviously making the numbers stack up, and typically you're going to achieve higher rents for studios, which makes the scheme potentially more likely to be viable. I think what is interesting to note here, though, as well, is that particularly as the market is mostly made up of domestic students who are typically searching for 3, 4, 5-bed properties, we can see the market is not really delivering that type of accommodation, and it's really focused on the studios, which again is going to be predominantly targeting the international market. As I kind of already alluded to, what that means from a supply growth perspective is that we are again at relatively low levels. We're yet to finalise these numbers exactly, but this year we're looking at about 12,000 new PBSA beds coming to market. And we can see from the chart that is down significantly and has been steadily slowing. If we look at 2019, for example, we were looking at over 35,000 beds delivered in a single year. So again, significant slowdown in the delivery of new accommodation. Given the current cost pressures, cost of debt and so on, I think we're not expecting that to materially improve going forward. So I wouldn't expect us to get up to, for example, 2019 levels anytime soon. Equally, at the same time, obviously the HMO market, I don't think anyone's expecting significant increases there. So there are certainly constraints around the delivery of new HMO stock. Interestingly, I think it was recently announced that the Renters Reform Bill is going to get a second reading potentially next week. And again, that's going to be possibly negative for the HMO market. And of course, on top of that, you have Article 4 directions as well, which make it difficult to deliver new HMO stock. So what does this all mean from a student's perspective? So just to highlight 2 locations where we've seen significant uplift this year in booking velocity or occupancy. So we have Glasgow on the left and Southampton on the right. What the lines represent is essentially how occupied those markets are over time for either last year or for the cycle that's just ended, either split by clusters or studios. And straight away, what we can see from that particular data set is in both markets, there's been a significant uplift in that booking velocity. So in short, rooms were letting much, much faster this year than they were last year. Again, Glasgow's been well reported. Southampton's an interesting one. Certainly, if you look at the headline full-time student numbers, they are possibly not as positive as some other locations, but certainly it's a city where we've seen a relatively rapid increase in Chinese numbers, and that seems to be having a positive impact from an occupancy standpoint, from an operator standpoint, less so if obviously you're a student. There has been some relatively late issues that we are aware of, particularly in places like Glasgow. So the Pearson accreditation issue we know did create some voids late in the cycle. But again, on the whole, occupancy very strong this year in those particular markets. In terms of the impact on seasonality, so on the left-hand side, we have the HMO market, and the right-hand side, we have PBSA. And this is showing the cumulative proportion of inquiries for both accommodation types that we are seeing through our platform. Straight away, we can see that the HMO market is much earlier than PBSA, generally speaking, and that's a trend that has been in place for a number of years. But equally, in both accommodation types, we're seeing that seasonality move forward, and we can see that by the light blue area in these cases. So that's a trend that's one to keep an eye on. A good example of that is in somewhere like Durham, where we're seeing a lot of interest in HMOs now already for next year. So again, one to keep an eye on in terms of are those markets, particularly that are tight from a supply and demand standpoint, just going to become earlier and earlier. Just to talk briefly on HMO rentals, rents and PBSA rents and how that's changed for 2023. So if we look at some of the headline numbers, so for PBSA, for example, we saw like-for-like rental growth nationally of 10.1% for 2023, so double digits. I think Unite were recording around about 7%, and Empiric, I think, around about 9%. So again, strong rental growth for the PBSA sector. And that's also the case for HMOs. So again, on a like-for-like basis, we're looking at rental growth of about 13.1%. So again, we're in double digits territory there. I think what is interesting to note is when you start to look at that rental growth in comparison to what you might classify as income, particularly for students in England. So maintenance loans, for example, went up 2.8% this year. So you have rental growth in double digits, and yet you have maintenance loan growth of less than 3%. And that's a trend that we've seen for the last few years, where the maintenance loan has not kept up with inflation generally, but also rental growth. And that's going to be causing a squeeze, again, particularly for students in England. In terms of 2024, as we're now entering that cycle, obviously it's still relatively early days. But again, early indications in places like Durham, where the market moves very early, we're seeing rental growth of 10, 15, possibly even 20% in the HMO market. And again, for PBSA, we would probably expect at least double digits rental growth for 2024. And so in terms of just looking forward and how the market could change going forward, taking this back to one of the first slides we went through, we saw obviously up to this point in time, demand was outstripping supply growth. And that's a trend that we don't expect to change. So if you look at those projections going forward, and again, that's what we've done on this particular slide, we can see the imbalance between supply and demand at a national level very much looks like it's going to widen. So again, supply growth is going to struggle because of everything we've touched on. We're obviously now seeing a greater population of 18-year-olds in the UK, and I think international demand is expected to continue to remain strong. So again, looking forward, supply really not able to keep up with demand. Having said that, there will be localized differences. So a Coventry, for example, has been a challenging market where the reverse is true. So we've definitely seen supply growth outstrip demand, and that's obviously created some challenges for operators there. But then equally, you compare that to a Glasgow or Bristol, for example, and those markets have been, again, not keeping up with demand growth. Just another interesting way to look at supply and demand. I've already mentioned how it does differ very much per location, but equally it's important to understand the micro location. So this particular map is just looking at Leeds, and we've picked Leeds because it has one of the largest pipelines in the UK. And the map just shows all existing PBSA accommodation, all existing university accommodation, the campuses, and then each individual development, which is represented by the orange markers in this case. So something to consider, and again, this will vary per location, is how localized supply may change. And we've certainly seen this in some locations where a PBSA scheme that perhaps is in what you might classify as a second-tier location, so perhaps not as close as some competing schemes, what it could actually find is that as new stock comes online, that scheme will then find itself in a third-rated location because actually accommodation is being delivered that is better positioned. So it's something to bear in mind on. It's something we've been looking at in quite a lot of detail recently, and is an interesting way to look at, again, very much localized supply and demand. So just before we do a quick summary, hand over to the panel discussion. I think in terms of future demand growth for the market, so as we touched on at the very start, the UK still very much is a top destination for higher education. Having said that, certainly from a UK student's perspective, the cost of accommodation, cost of living has all been rising, and that is putting increasing pressure, particularly on domestic students, albeit also true for internationals. And it does mean that, again, students having to work more to maintain or to supplement the lack of income growth from a maintenance loan perspective. And that has the potential to impact demand going forward. I think most would probably recognise that plus 10% rental growth in perpetuity is not sustainable. So it really comes down to at what point do students possibly vote with their feet and decide to not go to through higher education because it is too expensive. I think compounding that issue, particularly again for UK students, is cost of mortgages and obviously the cost of borrowing and interest rates generally. For UK students that are possibly having their income supplemented from a mum, dad, parent, guardian, obviously if those parents and guardians have seen, for example, their mortgage payments double, and that will be the case for some, the ability to then supplement their offspring whilst at university is going to be a lot harder. So again, just an interesting one to keep an eye on as we move forward. So to summarise very briefly, as we've said, supply and demand still very much in favour of the operator and the investor, and that imbalance very much looks like it will widen. There are a lot of challenges around the delivery of new accommodation, particularly at the affordable end of the spectrum, given the focus on studios, making numbers stack, cost of debt, construction costs, and so on. As I just mentioned, rental growth very, very strong, and we're seeing that already for next season, but arguably that's going to be unsustainable in the long term. And again, question marks over how that will possibly impact demand going forward. Having said all that, the devil really is in the detail. So understanding each individual location is obviously very important, and a national trend does not represent the localized supply and demand profile. And again, that does change over time depending on the delivery of new stock, as well as the change in demand profile in that location. I appreciate there's a lot of information there. As Aisling said, we are going to send this out post event, so do keep an eye on that if you want to rewatch the whole presentation as well as the Q&As that will come in a minute. At this stage, I will stop sharing my screen and pass it back to Aisling, and we can run through some of the Q&As.
Yeah, so just before we run through the Q&As, I think we're going to have a quick look at the poll results and see what our audience had to say about our questions. Okay, brilliant. So you should see the results on the screen now. So for the first question, we asked, what are your rental growth expectations for the market as a whole for the 24-25 season? And it seems that the majority of people, 64%, went in the 5 to 9.9% range. About a quarter went for the lower side, so 0 to 4.9%. And then kind of about 9% went for the 10 to 14.9% and the rest for the bit higher. So that's really interesting that there was definitely a leading answer for that in the 5 to kind of 10% range. So our second question is, do you anticipate Indian international students making up proportionally more or less of your tenants than last year? And again, the majority, over 50%, said more. About a quarter thought it might remain unchanged. And then about 20% said they weren't sure. And that just a small amount of people said they think that maybe there might be less Indian international students this year, which is, again, quite interesting. So the third question, where are you expecting the biggest cost pressures to come from in 2024-25? It was a little bit more split. So just under half of people said interest rates. And then almost even 28% said utilities inflation and 23% said wage growth. So that's really interesting. And no one's worried about their payment processing fees. So that's nice. The final question, we asked, which aspect of ESG do you prioritize during your decision-making process? And 45% said environmental. So that was the leading. About a quarter of people said they had no preference or priority, which is interesting. And then social and governments were about even, and 2% of people do not consider ESG in their decision-making. So those are some really interesting opinions, and it's great to hear what our wider audience thinks on these kind of topics. And again, obviously that will be shared afterwards. But I think we're all very excited to ask our industry experts some questions, so I'll get on with that. The first one I have is for you, Holly. So the question is, the latest UCAS data showed a dip in UK applicants for 2023. Was this expected, and can you explain a bit more about the UCAS journey to 1 million and whether this is impacted?
Thank you so much. Yeah, absolutely. So yeah, great to be here. I think just to give a little bit more context about us at UCAS, so we're much more than an application form. So every year we support about 750,000 students at a moment to go on to their next step. So whether that's undergraduate, postgraduate, technical or apprenticeships. And because we have such a large proportion of students applying to UKHE through us, it means that we get this amazing kind of insight and data, which means that we can both do retrospective and forecasting analysis. So by 2030, we think that there could be up to 30% more higher education applicants relative to 2022. And this is based off some really rigorous data sources alongside our own. And I will share the link to our essays. We put together a collection of essays, but particularly the one at the beginning, which kind of goes over how we came to our projections. I'll pop that in the chat in just a moment. So in terms of the journey to 1 million, what's kind of driving this? So first up is a rising 18-year-old demographic. So we could see a 38% increase in students from this background. So that would take the total number of 18-year-old applicants to just over 450,000 students by 2030. And also we're projecting a 60% increase in international students. So that really signals what Rich was talking about, that ongoing attraction of UKHE across the globe. And this does include a 75% increase in the number of non-EU applicants as well. And we're also just expecting to see an increased interest in higher education at the moment. But as you mentioned, we did see that slight decline in applicant numbers from last year. So as of the January 2023 equal consideration deadline. And so we've been really upfront about the potential disruptors. We know last year was a really complex cycle. It was impacted both by kind of cost of living and by geopolitics as well. So we did see that decline in applications from China, which was the UK's largest international market. And this was kind of most likely due to COVID-19 restrictions and disrupted learning. But especially on the kind of domestic front, we're really confident that this is a slight recalibration, particularly for those subjects that we saw really exceptional growth during the pandemic. So particularly for kind of key worker subjects, we saw something that we described as the kind of Chris Whitty effect. So many students really, really passionate about going out, supporting their communities, had seen all the amazing work that particularly the NHS was doing. And this drove some really kind of astronomical growth in key areas. So nursing, for example, so accepted applicants, we saw at the day 28 deadline, so that's 28 days after kind of results day. And for context, that's where about 98% of activity has happened in the cycle. So we saw that in 2019, there were about 23,900 accepted applicants to nursing. So that's sort of pre-pandemic. You know, by 2021, so right in the heart of the pandemic, that had grown to over 30,000, so 26% growth. What we've seen this year is that it's dropped back down to about just over 24,000. So still growth, but much more sustainable. I just don't think we could have sort of really sustained that sort of level of growth going on and on and on. So yeah, we're really kind of confident that it's a bit of a recalibration. I think from an accommodation perspective, and I know that Rich has already kind of touched upon this, it's about understanding the nuance of the kind of local and regional picture and exactly who and what is kind of driving that growth as well. So we know that across the kind of 4 nations, we are projecting a significant increase in the number of 18-year-old applicants. So if you are an accommodation provider that's kind of targeting that traditional 18-year-old market, I'd really have a look into that. But we know that growth won't happen kind of evenly across the regions either. So in London, we're projecting a 33% increase. And we know that more students in London go on to HE in comparison to other parts of the country. Whereas in areas such as the Southwest, where the entry rate is only about 31%, it's a much more modest sort of 17.8% increase in applicants that we're projecting. So what we're really kind of advising and really want to work closely with the accommodation sector on is that foresight and really careful planning is needed to make sure that we can kind of provide proper accommodation across these different regions and for those groups of students too.
Yeah, that definitely makes sense. Just being aware of what you're doing before you. Yeah. So I have a quite different question for you, Murdo. How have you seen the focus on ESG change over the last 5 years? Has it evolved from a nice to have to a necessity? How do you see the topic shaping the market in the next 5 years?
Okay, yeah, thank you. So I think ESG is really interesting in this sector because within real estate, actually, student housing is one of the only true access points for investors to touch the E, S, and the G. So when we talk about ESG in real estate, we tend to talk about ESG, and then actually quite in line with the survey there, where 45% want to talk about E, we just talk about E for the next 20 minutes. And if you think from an investor's perspective, if we come out the silo of student housing for a second, if I buy high street retail or if I buy, industrial or an office, as an investor, I can impact the E because I can make my building as efficient as possible. But then a tenant comes in and really the tenant takes control of the entire operation. With student housing, you can't just touch the E, but because you control the day-to-day operations, you've got a real focal point onto the S. So, for example, you've got all the people's homes who live with you, they live within a wider community, and then you control that procurement budget. So you can then work with who you want to work with to partner to provide the services. And that can be a really sort of value creation exercise for aligning with the beliefs of yourself and the social impact that your customers want to make. I would say, despite having said that, if we look back at the last 5 years, with a couple of notable exceptions, in truth, the sector's probably been fairly reactive rather than proactive. So we look at what's happened and we say, right, well, utility bills have just quadrupled. Let's all focus on efficiency. Then we've got, government legislation coming through about, reduction in carbon. I suspect a lot of people's response is, well, how far can we push that out and how can we do this the cheapest? And really, if you want to look at, if you want to guess the outcome of something, always look at the incentives for people. And most of the incentives in the businesses in PBSA are very focused on this 1 year. So it's always your 1 year of budget to the next year of budget. It's never sort of looking down the line. I think the next 5 years, though, there's probably going to be quite a divergence. And we're starting to see more companies be more proactive here. And I think there would not only just be a divergence in terms of who's proactive and who's box ticking, but I think there'll be a divergence in terms of investor returns based on that. If you break down student housing, everything comes down to income and, hopefully sustainable growth of income for the investor. You've got a situation where all your income comes from students and universities. Those demographics are so clued up about, the E and the S. The G kind of gets taken care of by a lot of the scale of investors in this sector. I think the G is something that actually the sector is very strong on. But, students, that demographic, there's never been a generation more educated on environmentalism, social justice issues. And you can see that touching a lot of their consumerism decisions in other areas. Universities aren't just interested, but they now get, have to report on this annually. There's league tables involved in, impact and, different items. So your customers all want this. And, I'll look back to just thinking about this, it's Google, right? So if people are old enough to remember sort of 15, 20 years ago, when you went on a search engine like Google, if I typed in something like student housing, you literally got taken to a page which maybe had the words student housing written 2,000 times. And then it just bombarded you with pop-up adverts, right? And I felt let down because there was no value in what Google had provided me. But people were taking a shortcut to the Google system, right? They were they'd worked out that Google was just looking for those words, and therefore they provided those most words. Over the years, Google changes its system every couple of years, and it has a dramatic impact on businesses that were just ticking boxes versus businesses that were genuinely trying to provide quality. So what we see 20 years on is that they now look for quality of content, triangulation to other quality websites, how long people stay on the page, etc. And the one thing that has lasted is quality. And this is a huge opportunity for the market in terms of the companies that are going to be proactive versus the companies who aren't. Because there's this great quote by Benjamin Graham, who's one of the most famous investors, that in the short term, the market is a popularity contest, whereas in the long term, it's a weighing machine. And actually, this is an issue that your customers put a huge weight on.
Yeah, that's really interesting. It'd be great to see some people taking a more proactive approach to ESG issues. So Philip, I've got one for you as well. In the current cost environment, do the numbers stack when looking at refurbishments or conversions? How big an opportunity is this? do you expect cost pressures to ease over the next 12 to 18 months?
Wow. Okay. Yeah, that sounds like 3 questions. So I'll try and answer those one by one, and big questions indeed. I think I'll preface it with trying to outline the kind of issue that we've seen in the market, and then go through how we think there's a potential solution to via refurbishment and conversion work. So I think accurately shown from Richard in the previous slides was there is a growing, continuing supply and demand imbalance in the market. There is also a growing concern around affordability and a strict lack of planning applications, both being input and also consented. So how would we look to solve that issue? And at Avonmore, we're looking at the sub 200 bed space and looking at that area which would be designated towards domestic mobile students and cost sensitive students, which is classically underserved. So then if we're looking to see how we could actually make those numbers stack, in the short answer, yes, they can stack. And the slightly longer answer, of course, it depends on a range of different factors. With any development, whether it's our classical developments in the residential space or in the PBSA space, we classically look at feasibility analysis across 4 main areas, whether it's the initial value of the land or the block value, the overall development cost, the cost of finance, and also, of course, the end value of the unit. So over the last 12 months, it has been increasingly difficult to make those numbers stack, both in the residential space and also in the student space, and that's for a range of different areas. The bid-ask spread on land values has been wide by historical comparisons. The core inputs for a development costs in terms of materials and labour, as shown previously, has been inflated, and the cost of finance, of course, everyone knows interest rates going up, so the cost of finance has been increased alongside that. Now, in the residential space, there has been more downwards pressure in terms of end unit values, but we have seen, values slightly stronger in the student space, especially in the area of the market that we would be looking at. Now, even though there's those challenges, that's not to say that it's not potential for the numbers to still stack, and it's going to depend on a range of different factors, such as the appetite and strength of the developer operator that we're working with, also the quality of the proposed scheme. I'm very concerned, as we were in the build to rent space in the residential sector, that you get a lot of people who are opportunistic, looking to move into that market to take advantage of these supply and demand dynamics without providing good quality stock, which is required for a sector such as this, covering a lot of the ESG items that Murdo has just been going through. And then also looking at the viability of the exit at the back end is also going to be key. So if we look in terms of the opportunity of the market overall, there is a growing and evident requirement for affordable student housing. And are we going to be able to do this with wide-ranging, large amenity PBSA? I think it's going to be difficult to provide enough housing quickly into that area. So if we look at that area of the market, it's going to be possible for it to move in there with refurbs and conversions of existing blocks, or the conversion of office buildings into that kind of stock. And I think it's going to be key about where we're actually going to be positioning this product. There is a growing demand within domestic mobile students and cost-sensitive international students to be able to also have a good quality of stock in the PBSA sector. Now, it's not going to be potentially be the all-singing, all-dancing stock, which is going to be provided at the higher end, whether it's with studios, whether it's amenities and gyms and everything else. So then it's going to be about, are we working with the local people in the area to be providing the gyms and the other amenities outside of our actual block itself. And then if we look at how we can actually make those numbers work, I think if we look historically, there was more leverage that was available. So, cash is going to be key here. We at Avonmore will be looking to work with, developers, operators who have got the ability to put significant skin into the game and are not only experienced from the development side in terms of cost control, but also experienced from the operating side in terms of operating expense control as well. And then if we marry that all together with some reasonable end value expectations, you can make those numbers stack. It is more difficult than it was, 12 to 18 months ago. But that's not to say that it's not possible, and especially when we're seeing the level of opportunity which is potentially out in the market, if people are willing to take a bit more, put a bit more capital at risk, but willing to take a slightly more longer term view, those numbers can certainly stack. In terms of where I see values and costs over the next 12 to 18 months, I think if I knew exactly where that was going, I probably wouldn't be sitting here. I'd probably be on a beach somewhere. But in terms of the initial purchase price, I do expect to see the bid-ask spread narrowing slightly. I do expect to see vendors of either existing refurbishment stock, which does require refurbishment because it is obsolete, all the current owners of office blocks, which are again obsolete and will have a huge amount of cost needed to get them up to standard, will start to limit their expectations of what they can expect for those kind of properties. In terms of the cost of finance and the cost of construction, again, I think those will largely be flat. I think we've seen a heavy amount of uncertainty in the market over the last 12 to 18 months, which has led to a lot of fat being included, both in terms of margin requirements and in terms of contractors in their budgets as well. So, I mean, if I look to the next 12 to 18 months, I will be forecasting, still an element of headroom into our feasibility analysis. I certainly won't be looking to input any potential downside pressure and cost control into those analyses as well. So it is more. I think I'll just end with it. It is more difficult than it was potentially 12 to 18 months ago to make the numbers stack. But given the size of the opportunity in the market, I do believe it is still viable.
Phil, I guess just to kind of add an additional layer of question as well. Are you seeing, or do you expect to see, any changes in configuration to try and make schemes more viable? So, for example, 2 people sharing a room, for example, like that. Are you seeing any kind of preferences there at all, or is it very much?
I think what you highlighted previously is, I think a lot of the data is showing where UK students in particular, and potentially some of the cost-sensitive students, are underserved. It's in that 3 to 4 bedroom clusters. Obviously, we'd use specific information based on the location as to what would actually be applicable at the time. But I think one of the benefits of a refurbishment or a conversion project potentially over a new development is the ability to put in a bit quicker, get these schemes up and running a bit quicker, and actually attack that potential demand sector immediately, rather than potentially in a 12 to 18 month period, rather than a 24 to 36 month period.
Yeah, I guess just kind of following on that point, one of the questions we've seen come in as well is around really demand profile between, for example, Chinese students, Indian students, and so on. And certainly if we look at our search data, and this is very much a generalization, so it does obviously vary. But yes, typically we would see those, particularly from China, more or predominantly searching for smaller units in terms of studios rather than 4 beds. Now, there is a question of, is that supply driven, in the fact that when they're searching, that is the majority of beds available, so therefore they search and inquire for that type of accommodation. But conversely, certainly when we've looked at data from, for example, searches performed by Indian students, it is different. So we do see a lower price point being searched for, and also a slight difference in accommodation type. So typically searching for HMOs as well as PBSA, but equally looking for possibly 3-4 bed clusters rather than predominantly studios. So yeah, I think definitely understanding that local demand profile is key, and again, that will vary per location, per university, and that's not static, right? It does change as well over time.
I think, Richard, on top of that, it's what are you allowed to do? So, planning more and more is directing you towards these things. So the London plan is going to have a huge impact in terms of clusters coming through. We're seeing certainly a lot of developments we've been looking at are down to sort of 12 metre square cluster beds. Edinburgh is about to bring in a heavily weighted cluster policy for planning going forwards. I think, everything that was being said there about the appetite to convert buildings is absolutely correct. So, a lot of my work is going around and speaking to investors around the world. At least 50% want the holy grail of, we're going to find assets that the owner doesn't realise have been full for the last 10 years and they're in a great market, and we're going to reposition them. It's not that straightforward. And actually, you see, I think the enemy of this, I think absolutely in terms of what Phil was saying, there's opportunity, but the enemy here is scale quite often. So for investors who want to come in at scale, I was reading recently, I think there's 3,000 beds going to be delivered from repurposed stock this year. And that's against a backdrop of 715,000 beds in the UK. So you start to get an idea, and then you saw 2 portfolios, which both came to market last year, which I would say contained primarily first generation stock, neither traded. And it's that bid-ask spread. So, there's a ton of issues in the way of making this happen. Otherwise, the theory is fantastic. You find these old buildings, you convert them, you move the rents on, you bring the yield in, and you sell them. But it's not always that straightforward.
Yeah, definitely.
I think that's absolutely key as well, Murdo. I think one of the areas that we particularly look for at Avonmore is that we're looking to work with developers / operators, because when you're looking at how thin the market is for this product to trade at the back end, you know, the real viable exit here is commercial money, long-term hold, and put into the portfolio. If we, I completely agree with what you're saying. If you, some of the buildings just aren't viable for people looking for scale. So.
Yep. Ashley, should we go back to some of the other questions?
Yeah, so I've got one here that I think I'll throw to you first, Holly, but I'm sure some others will have some opinions as well. So will limits on university course places create a spillover effect to non-elite universities, given the ongoing surge in the 18 to 19-year-old population? And are there any risks to foreign student demand from geopolitical tensions, the rise of Chinese universities, etc.?
So much, yeah. So I think in terms of sort of geopolitics, we see that has a really large influence on international student progression, but so does global competition too. So, you know, for last year, for example, we saw that, you know, Russia's invasion of Ukraine had a rapid impact on the progression of international students from specific nations. But in terms of the sort of attractiveness of UK HE, I don't think we can kind of rest on our laurels necessarily. Recent research that we did at UCAS found that 70% of the applicants that we surveyed, international applicants, were also applying to another country alongside the UK. So we could see that potential reduction in the UK's market share. We've just seen that Australia has extended its post-work study visa, making it a really attractive place to go for international applicants. And we've also had those changes to the student visa route to restrict dependence here. So obviously we haven't quite seen the effects of that on applicants, or we haven't been through that full bit of the cycle, so we haven't seen the effects of that yet. But definitely we can't kind of rest on our laurels, I don't think, in the UK in terms of our attractiveness abroad. I think that question about the sort of spillover into different kinds of providers is a really sort of interesting one. Because of the sort of effects of COVID and that growth in high tariff providers, it's quite sort of difficult for us to kind of model what's going to happen. But what I would really ask us to think about too is that kind of growth of alternative pathways. So we know that the growth that's kind of projected through the journey to a million won't be absorbed by that kind of traditional 3-year residential degree. And, you know, sort of pathways like apprenticeships are really growing in popularity. So we know that around half of the people that sign up to UCAS every year tell us that they'd like to know more about apprenticeships. And I just like to flag that we are sort of working with the Department for Education to provide a better experience for students who are applying to apprenticeships. We are now providing those on the UCAS platform. So it's just announced yesterday that we'll integrate the kind of apprenticeship application system so that everyone that visits our website will find kind of both pathways side by side. So if you're interested in doing law, you'll be able to kind of type that in and you'll be able to see both undergraduate degrees, but also kind of legal apprenticeships too. So that's really, really exciting. And by kind of this time next year, students will also be able to apply for apprenticeship through UCAS alongside an undergraduate degree option. So what I would say about the kind of diversification is, yeah, we can definitely expect to see that diversification in terms of different provider types, but also in terms of differing pathways too. And if you're kind of thinking about expanding your portfolio as an accommodation sort of provider, really worth in looking at kind of degree apprentices and what they might need from accommodation too, as we're really expecting to see kind of growth within that market.
I guess, Holly, I mean, obviously not telling you anything you won't know here, but certainly if we look at some of the latest UCAS acceptance data, certainly we saw that volatility over COVID, where you had those higher tariff universities arguably over recruiting, I guess, and some of them have obviously cut back sometimes relatively significantly in 2023. So again, just an interesting, I guess, bit of volatility in the short term.
Yeah, absolutely. I think because it was kind of a perfect storm, wasn't it, in terms of the teacher assigned grades. So the tags, yeah. Oh, it feels like a different time. I don't even want to go back there, but yeah, the tags. Yeah, we did see that big increase in students going on to those higher tariff providers. So absolutely. It will be really interesting to see how that's even out. And we did see that more kind of what I would describe as cautious offer making behavior from those higher tariff providers. But absolutely kind of going forward, it'd be really interesting to see how that kind of plays itself out over this cycle and over the cycle over the next couple of years.
Yep.
Okay, so quite a different question, and Philip, I'm not putting you on the spot too much, but what cities would you say might be unviable to build more PBSA beds due to low rents and maybe high construction prices?
Cities in particular?
Don't give all your secrets.
If you're willing to share.
Yeah. I think it's a difficult one, I suppose, isn't it? When you're looking at viability, there's always going to be a depends. You can always make it work at a level, is where we would always look. It's always going to depend on the risk appetite of the developer at hand. I suppose if you've got areas where you've got high land values and low rental growth, and it's going to be pretty difficult if you've got. So where we're potentially looking at more product would be in secondary cities where you've obviously got lower land value. Potentially you are seeing some higher levels of rental growth, and cap values are also playing out at a reasonable level as well. I think some of the data which has already been shown is some of the numbers that we've seen in terms of rental growth have been pretty eye-watering over the last year. I mean, in the residential space, it's reasonably eye-watering when you've got numbers in the double digits. But I think the numbers from Glasgow in particular would show that there's been extraordinary rental growth in some of these areas as well. How that will play out into the future is going to be difficult to forecast, but I do know at some point there is going to be a ceiling on rentals. It's when affordability will inevitably be the pinch point. I think I read a phrase the other day that there is demand, but not demand at any cost. Eventually, it's going to start hitting in the pockets of the people who actually pay the money in the end, whether it's by bursaries or whether it's by the parents' pocket as well. So I think there's a lot of different considerations to take into account in terms of the feasibility in any city. Luckily we've got companies like StuRents who can provide a lot of data as to underline some of those underwriting decisions.
Yeah, I think, Holly, it'd be interesting to hear your views on this as well, because I guess, following on what Philip's just said, everyone is very much conscious of the affordability equation and conscious of rental growth, but what is that cutoff? It'd be interesting to hear whether you're seeing more students raising that as a concern from a affordability standpoint, and if there's any difference there between UK and internationals. Again, we would expect UK search budgets, certainly what we see, are obviously much lower than what you'd expect to see from a Chinese student. So very different demand profiles, but again, even a Chinese student doesn't have an infinite budget. So I'm not sure whether that's something you can shed any light on at all.
Yeah, absolutely. I think it's just about kind of understanding the nuance of those sort of specific populations. So yeah, we're seeing that real growth in international students, and I think obviously they will have kind of specific concerns and sort of priorities there, absolutely, which will be different from UK sort of applicants too. What I'd really recommend doing is reaching out to kind of our accommodation team. So if you wanted, if kind of people on the call wanted more sort of detailed insight into specific kind of questions, our accommodation team will definitely be able to provide that. And they're just accommodation@ucas.ac.uk. So if you've got kind of specific region, a specific location that you really want to drill down into, they'll really be able to help with that.
Yeah, there was a similar question I see came in around about affordability and almost affordability stress, and it's something we're actually going to cover in our annual report. Because an interesting way to look at that is to compare, for example, rental growth versus budget growth. So if, for example, rents are going up 10% a year, but the average search budget is going up 5%, arguably that suggests that students are having to stretch further because their budgets are not rising as fast as rental growth. So yeah, similar vein, but again, an interesting topic.
I think it's always interesting to put it against the wider context as well, because effectively PBSA is a derivative of the UK residential market. So it's not necessarily a problem that the PBSA market or HMO market can control in its own right. And I think, you know, the numbers that you suggested at the start, Richard, in terms of rental growth and student, I think then if you go to the Office of National Statistics for England residential, it was just north of 7% in terms of rental growth last year across all residential. If you go to Rightmove, they're about 10.1%. And one of the key differences there is Rightmove takes in a lot of newer properties. But it's, you know, I think it comes back to what you discussed at the start as well, in terms of it's very nuanced in terms of different types of market, different types of buyer, and the price elasticity for different demands is going to be different. You know, with the pricing as well, we're in a highly inflationary environment, unfortunately. So if you look at, I think you mentioned Unite was, what, 7% last year?
Yeah.
Well, inflation today is, what, 6.7%? So unfortunately, the pound's just not worth as much as it was, which plays into this as well. But yeah, it'll be great to hear that data coming through as to where it's going.
Yeah.
Okay, that's brilliant. I'm glad we got to kind of hear from everyone there and hear some really varied opinions. We are very slightly over time, so I am going to have to cut us off. But we have obviously dealt with as many questions as we could. If there's any outstanding, we'll try and be in contact with all participants to kind of answer these as well. So I think that does just leave me to say a really big thank you to our panelists, Holly, Murdo, and Philip. And just to all the audience as well that joined today, and of course Rich for his great data presentation. So thanks everyone for joining, and we hope to see you all again soon. Enjoy the rest of your afternoon.
Thanks, everybody.
Thank you.